So if you were on stream this morning, you saw how epic this bounce was with oil. It gapped down, clipped below 44, at 44, and then shot up. But if you saw the video I made with Russia yesterday and some other stuff, this caught my attention. This brought the market up. We're going to talk about this. I'm going to go over the January effect. We're going to talk about oil, and I'm going to, explain the reason, and I'll give a quick recap of what happened today. So, how are you guys? I got the shirt back. Well, it's easier to record. We went late on the stream, 7 hours. I'm going to try to get the clip of the NVIDIA play. We hit a good one. I'm holding that one overnight, and I hedged it. That was great, but if you want to go watch the stream, it was 7 hours. We did that one right in the morning. That was a good play, but a lot of stuff happened, and I'm making this video on oil because I got some time to go look over it now, and the situation that developed here with oil, and the markets are closed right now, actually, so we should see where we closed. Today was a decent, I have a S&P chart right here. I didn't realize that. Today was a decent day. We were talking about it. It closed up. Everything looked good. It was decent in the sense that as long as we didn't get one of those random mad volatility pullbacks, and it looks like literally right at close, we kind of did the little gap spike up thing that we've been doing. So overall been solid. We did gap down and then we just went straight up. It was there were some great calls that were able to be made, but it's looking decent. But I'm looking at oil because there's dislocation. The pound got killed, the dollar's increasing, which isn't too good usually, especially if it keeps going up. But oil went up, and that's what pretty much saved the market. So Trump also spoke today. Really, there wasn't too many headlines over the weekend. China, I didn't talk about this in the last video. China had bad data. China had the worst manufacturing data in like 19 months, and that was a sign that it's slowing. China dropped about 1.5%, and China's at all-time lows on their stock market, which, again, that's something I'd pay attention to. And this is what I talked about it on stream. There's dislocation where the dollar's going up, but oil's gone up, stock prices are gone up. I think gold was going up. I need to double check. I'm not sure, but regardless, I know the monthly, weekly trend on gold has been going up. And what else is, the pound and the euro and a lot of other emerging countries and just global currencies got killed. So there's dislocation because the market's going up. Now, this is what I like because you guys saw last time I called out the XLF, the finance and transport dislocation and the divergence. Look what happened. So this is not the divergence. This is dislocation. I guess the difference too, this is where it starts. It starts to dislocate. And then now, if it continues, we'll see the divergence. So that's the difference between, you don't want to play the dislocation because that's where it's volatile and it's unknown. And that's kind of how the markets feel. It's been a good first day overall. But the big thing to watch with oil, that happened. And so here's the story now. One other thing, Trump just spoke. He said he blamed the drop on a glitch in the market, which I LOL'd at. But, he said with the help of the Fed, things should be okay. Another commentary from I forgot which board, they said banks are liquidized. So it's this is the weird part where markets didn't like what Steve Mnuchin did the first time when he called for the banks, is that nobody thought anything was wrong, but when you have them people reassuring, that's when they start to question. So that's something I'd look for. But the real story here is oil. Watch the ruble, watch the video I made yesterday on it, but how this is a crazy move, and now I found out the details why. It's not because China said a risk of contagion, but it was from the Sinopec issue. If you guys aren't, I looked into it now, but it was last week. Asia's largest petroleum exporter, they had one of their subsidiaries, Unipec. They made crazy derivative bets. I think it had to do with natty gas and oil, and they lost really, really bad. And now today they suspended people and got rid of people. It was a scandal. They lost a lot of money, but now there was a Bloomberg report saying that there's a lot more, this could develop and get worse, in that some of China's regulators and assets, it's related to that financial holdings company and that petroleum company. So now they're checking to see if there's more losses, but really they're worried. They literally said they're going to be inspecting accounts and doing that because there's a risk of contagion from those bad oil bets and stuff with the oil. So oil is very volatile right now. And I think we might get a new round of sanctions coming here soon. And now Donald Trump, even in his speech, he was talking about the government shutdown. He said as long as they want, we're approaching it longer and longer, no deal made. We're going to see what happens tomorrow. They were supposed to be going in talks, but as that gets longer, it gets worse. The dates to watch, January 5th and January 7th and January 11th. As we hit January 11th, that is when every funding cuts, temporary funding for most people stops on the 5th. Right now already, people, if you worked in the government December 22nd and beyond, you're not getting paid starting already. So it could get worse. I have the video talking about bonds, the CLOs, and even what I could expect and how I could expect this to move. So there's that. The last thing I want to talk about is January. The January effect. I'm going to have this article from you. I'm glad they updated it to make it reflect recently, but they did it. It's Investopedia. You guys could go look at this, the January effect hypothesis. And why I want to go over this with you guys is so you could understand some of the stuff you see in the chat when you hear people talk, and in general, so you understand what this is and why when you hear me, when I hear people talk about this stuff, there's a good reason why you'll get why I don't like it. But pretty much here it is. January effect is seasonal increase in stock prices during the month of January. Analysts generally attribute this rally to an increase in buying, which follows the drop in price that typically happens in December when investors engaging in tax loss harvesting to offset realized capital gains prompt the sell-off. Another possible explanation is that investors use year-end cash bonuses to purchase investments the following month. So why is January a strong month? You know, it has historically been a strong month, but people also attribute it to the tax selling and this. And now again, one thing is to offset realized capital gains. So you're not going to sell stuff if you're losing, because then you would just take the loss unless you want to realize a loss. So that's one part to note. But then year-end bonuses, I don't know. Did anyone get a bonus this year? If not, you should send me one. I didn't get a bonus. But here's the hypothesis saying that, you know, is a hypothesis, and like all calendar related effects, suggests that the markets as a whole are inefficient, as efficient markets would naturally make this effect non-existent. So you see why I do not believe this stuff, because to believe it would have to suggest that markets as a whole are inefficient. And are they? To a degree in this day and age, but for the most part, there's a new efficiency, and I guess we have a new normal for efficiency, right? January effect seems to affect small caps more than large caps because they're less liquid. So it goes down. They've been studying it since 42. They've seen it, but they've said that it's less important as people are really, nowadays they're using tax-sheltered retirement plans, and they have no reason to sell off. And a lot of times it even goes on to say that, where is it? You know, you guys should go through it. There's studies and criticisms, and they've done statistical analysis where it's pretty irrelevant only up until certain days. But in more recent years, the January effect has gone away. Even the same thing exists with the Santa Claus rally. A lot of the date-driven stuff it's just from older times. You know, it's just different. That's why I said we have a new normal for efficient markets. I might make a video on this. I always thought trading was so ahead, but it's starting to get outdated. There's so many factors, and I could see the outdating, and I mean that just by the knowledge of people. You guys will see these videos and streams and how I trade. Like, how do you know this much? It's just because look at the content out there. A lot of you guys are being sold 1990s trading bullshit. For real. You guys are trading on the same information in the same basis and concept that I started trading at in 2007 when I was 14 years old. So it's getting at that, because that's what this is. The January effect is old. It just doesn't apply because, again, there's the tax reasons, and people could get around taxes easier. They're not selling as much, and they're not going to buy back in. You know, buybacks, that's something I'm going to talk about here with earnings too, as it could have another effect with the market. But essentially, people aren't selling out like that for their tax reasons. And at the same time, the markets learn to price it in. That's stuff that people don't realize, that a lot of stuff, the market prices it in already. That's how efficient markets operate within. This is what I meant with future valuations in that video. Whereas the markets efficiently will go to that point where, okay, if that really did exist and the market was able to pick up on it, people would be buying it, but your January effect would be priced in from December or November. Do you see what I'm saying? Or even the price that it sold off from when it go lower than, you know, where it's at. So it would all get priced if that was a real effect. Do we see it? Yes. There's, you know, I'm not going to say it's anomalies, because any of this data is that you don't know what's going to happen year to year. And like I said, watch the video on my Russia and oil stuff, because I think we are in almost a carbon copy of the beginning of 2015. 2015 or beginning of 2016, either or. There's stuff to watch with the currencies. Again, this is a big dislocative day today. So I think it's going to be very, very interesting. I can't wait to see what happens. So I hope you guys are ready. We should be on the stream tomorrow. If you did apply, I'm going to email you or call you today. So get ready. I'm excited. The pledge class will be on the 7th. I have some updates. I don't know. I might call people. I might share it here. We'll see how my time goes. But either way, I love you guys. Get ready for just... it's 2019 already, man. Let's just fucking get it. Love you. Bye.